The markets were pretty much flat this week, with the S&P 500 down slightly and global stocks up slightly. We had a good inflation report on Wednesday, but the thing that got my attention the most was the market catastrophe that didn't happen. Sunday night, when I saw that the Department of Justice served the Federal Reserve with grand jury subpoenas about Chair Powell's testimony and his video response, where he made it crystal clear he thought this was about threatening the Fed into lowering rates, I looked at the stock market futures and expected a pretty big sell off this week, starting Monday morning. This wasn't normal, and it wasn't good, even considering how desensitized we're becoming to what is normal and good. But it didn't happen. The market proved resilient to this latest dose of nonsense. Important people spoke out against the subpoenas, and I think we move on. And that's a good thing for investors to see. As I said, the S&P 500 was basically flat. It's up about 1.5% year to date. Global stocks are flat too, and up close to 2.5% this year. And we're within a percent or so of the all-time highs in both of those indices. And the 10-year Treasury yield didn't move that much either way. One index that is moving is the Russell 2000, small caps. They're up about 8% this year, dramatically outperforming large cap stocks. And with all the legitimate concerns about S&P 500 valuations, driven by the expensive mega cap tech stocks and how concentrated the S&P 500 has become, last year and this year so far, international markets have outperformed, and this year small caps have joined the party. So there are good options if you're looking for stock market-like returns but want to diversify away a little bit from the U.S. large caps. Additionally, the December CPI report was encouraging to the point where I think we'll see rate cuts this year to support the labor market. Although, and here I do not want to get subpoenaed myself, there is reason to wonder if inflation is moving down to the 2% target and the economy is as strong as people are expecting. For example, the Atlanta Fed's respected GDP Now estimate had Q4 2025 growth at 5.3%. Why we need rate cuts and whether we wouldn't be better off holding some dry powder in case the economy weakens substantially. And I shared this last thing in my Wednesday reading list a couple days ago. The final thing that jumped out to me was the mortgage market's reaction so far to President Trump directing Fannie Mae and Freddie Mac to buy $200 billion in mortgage bonds to push mortgage rates lower. You can check out the article I shared for a breakdown of why that theoretically would help. And we did see a slight dip in mortgage rates this week, but these purchases may be too small to move the needle much further downwards. An otherwise quiet week in the markets for your money. We didn't get the Supreme Court decision on tariffs. Maybe that'll come next week, and I'll touch on it here. In the meantime, please like and subscribe to the channel and check out the blog for more insight. Thank you.